What is going on, YouTube family? Welcome back to another episode of NAS100 analysis today. And we're going to be picking up from where we left off the other day in regards to the moves that I made. First things first, we're looking at the daily, so we're just going to jump into the 1 hour chart frame, the 1 hour time frame, 1 hour time frame, right? Just make sure you think it's nicely expanded. Expand the MACD as well, make sure that's all looking proper. Right, so that looks respectable enough. Okay, so the two trades that I had over here, so this one up here and this one up here, I closed out in profit, and I was shaking out of the trade around this area right here. I was shaking out around here somewhere. Actually no, I targeted here because of this wick as my TP level or trailing stop level. So I was taking out around this zone over here, right? I thought it was going to go down lower, it didn't, so it took me out. Okay, and then today I put in another sell right here, and I was just taken out not too long ago, right? And I was taken out over here at this level right here. So we know this week has been good, right? I haven't taken no big profits, the kind of profits I like to see, you know, the 10Rs, etc. But however, I've taken a small amount and it hasn't been bad. And all of these, they all accumulate, you know what I mean? They all help keep the lights on. So I got all of those. I'm happy about that. And right now I'm not in anything. I'm waiting for another opportunity before I get into anything else. So what I'm going to do is I'm just going to clean up this chart right now. Just clean this up. Give it a bit of a tidy. Okay. And we're just going to expand this little trend line over here. And you know, I think I'm actually going to change the layout of this trend line. Just going to make it into dotted ones. I think the dotted ones look a little bit nicer. Actually, no, wait, we're going to do these ones here. Yeah, those ones look a lot nicer, in my opinion. You know, I actually think they look a little bit nicer. So we're going to do those, right? And what we got going on right now is we have a channel going on that we can see in the hourly, right? And where price is at the moment, I'm now thinking to readjust and maybe think about laying in sells from this level right here, right? I could be wrong, but that's what I'm thinking about, laying in sells at this level right here, just because I think price is going to get to that level and then it's going to begin to pull back down again. Now, I'm not saying that it's going to break the structure and fly all the way down, but there is a good chance it could do something like this, where it heads up to this zone, right? Okay, and then it comes back down to this zone. And reason why I say that is because this zone has been visited a few times, so we could visit it again. So I mean, so my way of doing things is I try to go maximum greed, right? Maximum greed, yeah? And I would aim to target, say, down here, or even better, I'll probably even look at down here as a potential level for a TP, right? Now, since I've been using this little tool that I showed you in the last videos in regards to customizing the Fibonacci in a way where it actually calculates your risk to reward ratio, okay, which obviously my good friend shared with me. Where he got it from, I don't know, but it's beautiful. I absolutely love it. All right, so in using that, I've kind of realized that targeting something like this has a higher chance of being hit, than to target all the way down here, even though I know for a fact that this particular zone over here will need to be filled at some stage. So this zone will need to be filled. All of this move to the upside, we need to get it, and I believe we're going to get it on the return to the downside. But however, any trades that I put in now, okay, I would just simply be targeting this zone. So if you want to know what that is, I will happily share that with you. So entry, I'll be looking at potential entry. I'll be looking at, and that would be 11916.44. So that is my potential entry. Okay, I don't know if I'm actually going to do that or not, but we'll see. And my potential TP would be 11516.50. And if we did a little check as to how much pips is in that for me, providing I get it all dead on and everything works out like how we're supposed to, we're looking at roughly around 395 pips, which is not bad. 395 pips is not bad. Okay, depending on your lot size, it could be very, very, very respectable. All right, so that's what I'm kind of leaning towards doing should price go in the direction that I'm expecting to go. However, price may even push all the way up here. So let me just draw this little level out. Price may come all the way up to this zone, right? Why do I say that? Because it would want to fill this wick, right? So this area is a potential liquidity grab area. So this whole zone is a potential liquidity grab zone, right? Which is where a lot of people will have their stocks for sales, I myself included, if I take my sell up here. So if I take my sell up here and it pushes all the way up, chances are it will be taking me out too, right? Because this area, this little red zone that I've done at the top, that would be a liquidity area. So this whole area from here up to the top side is all liquidity zone with a little bit at the top. So I would want to be careful how I would stick in any type of trade. So the strategy that I would use in this case, okay, sometimes it works, sometimes it absolutely does not. I'm not going to lie to you guys. Sometimes it absolutely does not. And what it is that I will place my sell stop underneath the uptrend of the candles. So as the candles are pushing up, so a good example would be something like this, right? So I can see prices pushing up right now. Okay, the smart place to actually put any type of sell stop order would be either around here, right, around this level where I've just hit, or this level right here. Okay, but obviously this is me here, so I don't do that. I would most likely stick it underneath this candle right here. Okay, and what could happen is it could trigger it, and then it will just keep pushing up, and then obviously I'm in that zone of where I'm panicking and freaking out, etc. It happens, it gets the best of us. All right, so what I would do in this case is I would wait. So I won't do anything tonight. I will see how the candles are looking. I'll see how the candles are looking in the early hours of the morning when I get up, right? So if it's gone into some type of a consolidation where we have a descending flag or a descending wedge, then I will know that there's a good chance price is going to be pushing up. So I can do one or two things. Either I will join it and ride it to the upside, or I will say the downside potential has more profits in it for me. So then what I would do is I would take the sell option, and it will either be at this level, and at this level this is my risk, right? All of this is my risk. My stop is not going to be anywhere near as big as this whole zone, right? It will be a lot smaller than that, hence why I have to be really careful how I do it, because I know if I'm putting a sell at this level, I'm going to need a stop, a large one, a stop that covers at least all of these zones up here. So if I sell from this sell level, I'm going to need this whole thing here as a potential stop, right? That's 197. I'm not comfortable with that at all. I would rather have my stop lower than 100. 36, 20, 40, that kind of number I can kind of work with as a stop. So if I took a sell at this level, my stop will be quite tight, which basically means there's a very, very, very high chance I'm going to get stopped out in the negative. But that's the game that we play, right? I could push it all the way up and I'm completely wrong. It keeps going and then it hits it, or even worse, it hits it and then comes back down again. So I would rather do it in that way and take a small loss, right? And then just keep tracking the markets until it gets to a zone where I believe it will be pulling back, and then sticking a sell. Like I said in my other videos, right? Although you want to follow the markets in terms of the direction it's going in, and as we can see right now with this particular move that we're seeing, this is clearly an uptrend. It's not a downtrend, it's an uptrend, okay? But if we look at this on a macro, right, and that is the most important view in my opinion, the most important view when you're looking at trying to take trades in the markets, is what is overall is actually doing. This whole thing is a downtrend, right? So if you look at it in a day, it's a downtrend, not an uptrend at all. And I would rather be facing in the direction of the day than the direction of the hour. That's just my opinion. I'd rather face the direction of the day than the direction of the hour. Because the direction of the day will give you a move like this and a move like that. A direction of the hour, you're looking at things in this little box where everything is all condensed and it's just all choppy. Do you know what I mean? It's either way, it's not bad, because either way it's still profitable. It is still profitable. I mean, you can still make magic with on the 1 minute chart, as well as the 5 minute, as well as the 15. But if you have a really busy schedule, for example, there's other things you need to be doing besides trading, then the day chart is kind of what you want to be playing with. So I don't know if everyone kind of sees my point of view in regards to how I'm seeing this, but I personally, in my personal point of view, following the direction of the day, especially if you have a very busy schedule, I think is way more useful than following the direction of the hour. But however, with the Christmas holidays coming up, most of you guys, if you are working a 9 to 5, there's a very good chance you're going to be on a Christmas holiday too, roughly for about 2 weeks. It depends. If you work in the corporate world, you're getting roughly about 2 weeks off. I work in the corporate world, so I'm getting roughly about 2 weeks off. So that will basically mean the 15 minute, the 5 minute, and the 1 minute are going to be my friend, because I'm going to have a lot of time to play with. There's only 2 days during the Christmas holidays when the markets are closed. The rest of it, the markets will be open. I'm not expecting hyper volatility in the markets, but however, there is going to be some kind of movements, either going up or going down, and these are things that we can obviously capitalize off and make profits off. All right, so that's all I had to say in regards to my overall view in terms of how I like to position myself in the market. Hence why I'll just wait. Like when the market is pushing up, I'll just wait, because I don't want to be buying it. I want to be selling it, and selling it basically means if it is in a downtrend, I can have a very ambitious stop. And I like to be greedy in the markets, and I want to be facing the market in a direction where my greed ambitions will be honored. So since I know this is a downtrend, facing downwards basically will give me a lot more profit than facing the upside of the markets. And give or take, profits is obviously it's up in the air, because if you're using trailing stops, your profits could be quite low, and if you're not using trailing stops, your profits will be quite large, right? And either way, there is that always little thing in the back of your mind, which is the stop losses, those being hit and those not being hit. So these are all things that obviously we need to play with to make sure that that we get the most out of the markets as we move forward, right? So that's the roundup to this whole video. This week so far has been great. So far, no issues whatsoever. We've done nothing but one thing, which is bank. That's the kind of issues I like. Banking, right? And we'll see how it pans out. So I've already laid out what I plan to do in regards to my positions. So my sales is all set up. So now all I'm going to do is just wait. So tomorrow, hopefully, I'll be doing another video, and hopefully I will be in some type of trade. If I'm not, then obviously I'll come in and talk about where I think market is going to go based on the overall direction, and then we'll take it from there. So guys, don't forget to check out the videos at the end of this video if you haven't seen the videos leading up to this particular video, right? And I want to thank you for coming over to give me obviously your time to watch Pips and Points.
and I look forward to seeing you in the next video, which will be very, very soon. So for now, this is Pips and Points signing out.